Hello, welcome everybody. I will be your host for this webinar, this Ask and Share live session on personal tax and social protection, what HR and French residents in Korea should know. People are still joining, but we will start now. Just a short recap on the rules of this webinar, just to start. You can ask a question anytime during the webinar. So this is really meant to be an interactive session for you. So you can just unmute yourself, turn on your video if you want to ask a question, even during presentations to our two presenters today. You can also choose to raise your hand in the chat, in the window below, or ask your question in the chat, and I will be moderating this event. So read your question and ask them to the speakers if you need. The goal of this session is to be interactive again, to share experience and best practices on this practical topic. For those who want to, there will be a replay available on FKCCI YouTube channel after the event. And all the information will be shared. We will share also the presentations to the participants. So everything will be available. Just a little reminder that FKCCI has been designing this kind of events on a new format designed to be interactive, because we answer the needs of the business community. As you all know, this is a really challenging business environment in the post-COVID recovery era. So FKCCI is becoming more and more important stakeholders, and for the business community to ask your questions, to share your experience with us. We have a group chat on Kakao called Ask and Share that all members can join and interact directly, where we post practical info and useful information for you at all times. We are often in contact with Korean authorities to have the most updated information for you. Without further ado, let's start with the session. So we will have two speakers for today, Cedric Legrand, FKCCI Managing Director, giving you a macro overview of social protection spending in Korea. So just to give you an overview in comparison with France on the topic of pensions, health insurance, and the topics of our webinar today. And Mr. Julien HERVEAU, Managing Partner at Mazars Korea, will give a more practical and detailed presentation with a focus on tax as well. Cedric, I let you the floor. Let's start.
Yes, thank you very much, Oriane, and thank you very much for joining us today. Then I hope this session will give you useful insight about taxation and social protection you can get in Korea as a foreigner, and in particular as a French national. Our main difficulty to prepare that topic is its very broad perimeter and the diversity of each individual situation. Then we will not pretend to cover each particular cases, but we want today to give you practical information on the general framework and also collect your question in order to continue this work afterwards. It will be also a good opportunity to share your own experience, so don't hesitate to participate when you want. Then I would like to thank Julien HERVEAU from Mazars for its presentation. But before, to discuss the situation for French residents in Korea and sometimes the different options between the French and the Korean regime of social protection, I would like to make a short introduction to share with you some data in order that we can have a general idea about the level of social protection in Korea. First, we can have a general idea of the level of social protection in Korea with the amount of public social expenditures, We can see through the OECD database that France and Korea are in a very opposite situation. In 2019, public social expenditures amount to 31% of the GDP in France, or 730 billion euro, and they amount to 12% in Korea, or 230 trillion won. And the average in the OECD countries is at 20%. Then at first sight, it appears that the level of social protection in Korea is low compared to other OECD countries. But we will see that those figures cover different situations if we look more in details, each categories of expenses. The most important category in Korea is health, which represent 41% of public social expenditures, or 4% of GDP. For France, health is a second category, as it represents 28% of public social expenditures, or 9% of GDP. And at the opposite, the most important category in France is pensions, which represent 40% of public social expenditures, but only 26% in Korea. Then we will see after that this level is due to the fact that the pension scheme in Korea is quite new and that the related amount is increasing very quickly now. We can also see that during the past 10 years, although social public expenditures were stable or even decreased among most of the OECD countries, they increased significantly in Korea, from 8% to 12%. And this trend should continue. I share with you the social public expenditure track, which was published last February in a report of the Korean National Assembly Budget Office. This graph shows that 30 years ago, Korea was at 2.6% of social public expenditures and 18% of tax and social charges. Today, we are at 12% of social public expenditures and 27% of tax and social charges in the group of low tax, low welfare countries with US, Swiss, Turkey, and Chile. And the objective of Korea is to join the middle tax, middle welfare group in 20 years, to be at the current level of countries as UK, Canada, Japan, Spain, and to join the high tax, high welfare group by 2060 as France, Germany, Sweden, or Finland. Then for the last 2 years, we can say that Korea is on the track as public social expenditures increased a lot with the COVID-19 by 13% in 2020 to reach 260 trillion won. And all taxes and social charges are also increasing. They represent now 27% of the GDP in Korea compared to 46% in France. In particular, taxes on personal income are at 5% of the GDP in Korea and at 10% in France. And social security charges are at 7% of the GDP in Korea and 15% in France. And according to the projection of the National Assembly Budget Office, taxes and social charges should reach the OECD average at 34% in the next 20 years to finance, in particular, the increasing public social expenditures. I will focus now on health expenditures. In 2020, they amount to 160 trillion won in Korea, which represent 8.4% of the GDP, or 3.1 million won per person. They are below the level in France, where health expenditures amount to 280 million euros, which represents 12% of the GDP, or 4,200 euros per person. But if we compare health expenditures evolution in France and in Korea during the last 10 years, we can also see that expenditures per capita increased more quickly in Korea, as they double in 10 years. In France, they increased only by 21% on the same period. And what is important for us today is the part taken in charge by compulsory healthcare schemes, mainly the national insurance, which is a common health insurance introduced in Korea in 1977, and which became an universal health coverage by 1989. But there is also the medical aid program, which is a public assistance scheme designed for low-income population. Then those expenses paid by compulsory schemes represent 62% of health expenditures in Korea and 84% in France. This ratio is constant for Korea over the last 10 years. The part of health expenses covered by the compulsory health scheme remain at 61-62%, but this rate varies according to the type of health expenses. For inpatient, the national health insurance will usually pay 80% of the treatment cost. And for outpatient, it will be between 40% for high-level hospital and 70% for common clinic. But it also depends on the type of health service, of course. The national health insurance can cover up to 95% for some disease, as some cancer, for example. After, for voluntary healthcare schemes, the evolution was different in France and in Korea. In France, they decreased from 40% in 2010 to 7% in 2020, while in Korea, they increased from 5% in 2010 to 9% in 2020. And finally, the part directly paid by a household represents 29% in Korea compared to 9% in France. Then health expenditures are still a heavy burden for Korean households. In particular, in the case of expenses for hospital and ambulatory care, which represent together between 60 and 70% of total health expenditures, Korean households have to pay 24% for health services delivered by hospitals, compared to only 2% for France. And Koreans pay 36% for ambulatory care, compared to only 10% in France. And we are speaking about average cost, so that there are also important differences if people have or not a private insurance for health expenses. We said that insurance role is increasing in Korea, but at this stage, they cover only 71% of the population, although they cover almost all the population in France. It is why household out-of-pocket payments are still, in average, so high. So if you choose to be under the Korean regime of health insurance, you should think to get a private insurance individually or through your company. Then we'll see now pensions. The Korean scheme is based on 3 levels: the basic pension scheme, the corporate pension scheme, and the individual pension scheme. As those 3 levels are all funded pension scheme, we can assess their weight through their respective global amount. The basic pension scheme represents 57% of the total pension funds. The corporate pension scheme represents 18% of the total, and the individual pension scheme represents 25%. This means that the basic pension served by the NPS would represent, in average, roughly half of the pension that Koreans expect to get when they will be retired. The corporate pension scheme is mandatory, even if we will see that there are different options for employers and employees. And the Korean voluntary scheme, they will be very also a significant part of their pension. The basic pension scheme is himself divided into 4 regimes: the general regime for employees and 3 specific regimes for public officials, military, and private schools teachers. Then today, I will focus only on the general regime for employees. This regime is managed by the NPS, the National Pension Service, which was created in 1988. Then the National Pension Fund is now the 3rd largest pension fund in the world, with today almost 1,000 trillion won of fund reserve. Then employees aged between 18 and 60 are subject to the compulsory coverage of the NPS. Contribution amounts to 9% for salaries shared between employees and employers, and also for individually survivor pension, and also for individually insured person. So the insured person are entitled to get old age pension, disability pension, or survivor pension. Then we'll focus on the old age pension, which is paid monthly to people who made a contribution for over 10 years and who are over 60 or 65 years old. The minimum age is 60 years old for those who are born in 1952 or before. After 1952, we have to add 1 year every 5 years until 65 years old for those who are born in 1969 or after. And a reduced early pension can also be obtained at the age of 55 or 60 years old, according your birth date. Then the amount served as a pension by the NPS depends on the income, on the income substitution rate, which is today at 50%, but it should decrease progressively to 40%. It depends also on the average wage during the last 3 years to be related to the labor market evolution and indirectly to the inflation. It depends also on the average wage of the recipient during all the contribution period and the number of years of cotization. Then, for example, if your average salary is 2 million won by month and you were affiliated 10 years, you will receive 230,000 won by month. And if you can justify 40 years of cotization, you will receive 900,000 won by month. If your average salary is 5 million by month, you will receive 390,000 won with 10 years and 1.5 million won with 40 years. Then there is no any system of décote, as in France. The amount of the pension in Korea is proportional to the cotization period, and in fact, to the total amount of your cotization during your professional life. Then, of course, those figures will change every year with the new substitution rate applicable and the new average wage during the last 3 years. In 2020, last year, there was 26 trillion won paid to 5.6 million persons. Then we can see we are still far from the amount we see in France, where 133 billion euros were paid to 15 million persons. The biggest pension served by NPS in 2020 was 2.3 million won per month. But as the NPS was created recently in 1988, there are a very few number of persons who were affiliated during a long period. In 2020, there was 840,000 persons who were affiliated for more than 20 years, and they received, in average, 900,000 Korean won by month. And there was 55,000 persons who were affiliated more than 30 years, and they received, in average, 1.4 million won by month. Then it is only the pension served by the NPS. After, we should have the corporate pension scheme with the compulsory DB/DC plans, or the severance lump sum for some remaining companies who did not establish yet their DB/DC plan. And as for health, it is important to have an individual pension scheme in Korea if you are in the Korean pension system. Then according to your situation, you have sometimes a choice to be in the French or in the Korean system. And it is what we will see now with Julien HERVEAU. Thank you.
Thank you very much, Cedric. So this is very insightful overview. So normally you should be able to see my presentation, and I will go in very much details on practically the tax you have to pay in Korea and how to determine the tax to be paid, and at the same time to cover the social insurances and the contribution to be made in Korea. So if I will introduce first myself. So Julien HERVEAU, I'm managing Mazars activity in South Korea. I'm a French CPA, and I'm also registered as a foreign CPA with the Korean Institute of CPA. I'm a board member of the French Chamber since 2020. And as a board member, I'm working with Cedric and also Olivier Moreau, another board member, on a working group on this very important topic for the French community. Personally, I've been relocated to Korea 10 years ago. I came to Korea with my wife. I had 3 children born in Korea. So all those questions, practical questions, I had to ask myself those questions for my personal tax and the coverage for myself and my family. So I will also share a little bit of my personal experience. So let me start first with taxation for foreign resident and in particular for French residents. So I think the first question I have to ask when working, living in Korea, and is whether we are a Korean tax resident. So we have to look at the tax treaty between France and Korea. So there is a tax treaty signed between the 2 countries, and that gives some guidance on how to determine whether you are a resident of this country, so France or Korea. And then we have to look at the domestic Korean tax law, and they have 3 categories of tax residency. We have the non-resident, and the temporary resident, and the permanent resident. So I will start with the most usual case for expatriates in Korea. In most cases, we are actually temporary resident. What does it mean? That means that we are staying more than 6 months, or we are planning to stay more than 6 months, but we are less than 5 years in the country. So less than 5 years in aggregate over the last 10 years. This threshold, this 5-year threshold, is very important because once we reach a 5-year threshold, and I would say there is another one which is a 10-year threshold, the taxation and also some topics in relation to social insurance are changing. So temporary residents, we are less than 5 years in Korea, but more than 6 months. What happens? In this case, only domestic source income, in Korean source income, is taxable in Korea. Every foreign income foreign source income is not taxable unless they are paid out in Korea or transferred in Korea. What does it mean? In very simple example, if I have if I am an employee in Korea receiving salary in Korea, my salary is taxable in Korea. If I have a rental income for my, let's say, apartment in France, and if the income is not transferred to Korea, then this income is not taxable in Korea. It's taxable in France. So that makes the life of expats when they are for their first 5 years in Korea relatively simple, because in most cases, only their salary is taxable in Korea. And this is usually covered through the payroll activity of the company, which means all the tax filings, personal tax filings is done through the payroll of the company, the employer. Once we reach the 5 years, we are in a different situations, more complicated for foreign residents in Korea. We are in this case under global income taxation. So all income, either domestic or from overseas, are taxable in Korea. So if I come back to my example of rental income for my apartment in France, I have now, if I have stayed more than 5 years in Korea, I have to declare in Korea and to include in my income this rental income received from overseas. Doesn't mean that I pay double tax, doesn't mean that I pay taxation on this rental income in Korea, in France, but I have to declare in Korea, and then I have a tax credit that is calculated based on the tax that I've paid in another tax jurisdiction. So in my example, based on the tax paid in France. But it means that there might be additional taxation, because depending on my marginal tax rate in Korea, I may have to pay additional tax compared to what I pay in France.
Julien, I'm sorry, I'm interrupting you because we had a question related to exactly what you're saying right now. We had a question before the event, which was, I have a stock portfolio and Bitcoin in France. Should I have to declare that in Korea? So you're saying that it depends on the status of permanent or temporary. And what about, so Bitcoin, like, it's relatively new asset. So maybe you have more details on that?
So I think yes, the first question is more than 5 years or less than 5 years. So if less than 5 years, and if this is foreign income, not transferred to Korea, not paid to Korea, then theoretically this has not to be included in the Korean tax filings. If we are more than 5 years, then this is a global income. And we will see also that there is some other filings which are, we have to disclose also our financial overseas accounts, and cryptocurrency accounts will be considered as financial assets and will have to be disclosed to the Korean tax authorities. So that's different, I mean, taxation and disclosures. So I covered temporary resident, permanent resident, and the last category, this is for the non-resident. So normally people who stay less than 6 months, or who are not considered as a resident based on the tax treaties. And in this case, there are only limited obligation for taxation in Korea, and mostly on, again, on Korean source income. Okay, so that was the first question we have to ask. Am I a Korean tax resident? And what type of revenue shall I include in my Korean tax filings. And the following question is, how do I pay my tax there in Korea? So we have several cases. First case, simple one, and probably for most expatriates with a simple tax situation, they will fall in the first category. They have only wage and salary paid by a Korean company. This is considered as a class A income. So in this case, on the your monthly salary, the personal tax is already withheld by the company based on a standard calculation provided by the tax office. And at the after the year end, we process what we call the year-end tax settlement. This is also done by the employer through the payroll process. And this is where you have to provide all your deductions, your credits, you provide all the evidence so that the final calculation of your personal tax can be done by the payroll provider or the payroll team. And then depending on the final tax amount, either you get refunded because you have more tax has been withheld all during the year, or you have to pay more tax if not enough has been withheld during the year. So this is a simple case, and basically you don't have anything to do. This is organized by the company and by its HR payroll team. We have another case. This is, it can happen for some expatriates. This is when the salary is not paid by a Korean entity, but is paid from overseas. This can be, for example, stock options, or this can be for liaison office. Sometimes in liaison office, the head office is paying directly the salaries in Korea. So since the salaries are not paid by a Korean entity, we cannot have the withholding tax managed by the Korean entity. And in this case, there are some Korean taxpayer associations that are replicating this withholding tax system, and where you actually pay to the taxpayer association every month based on the salary you have received, you pay the tax, and at the end of the year, there is a tax settlement. So it's quite specific, but you have to be aware there are around 20-30 taxpayer associations. They are normally working with accounting firms and law firms. There is one affiliated to Mazars, for example, and you can get tax credit when you have income that is actually declared through a taxpayer association, with some limitation that will apply from next year, and a tax credit which will be up to 1 million Korean won. And the last case, this is the last case is very important, especially if you have stayed more than 5 years in Korea, is that you have to, and if you have other income, not just salaries, you have to file a global income return, and this one has to be filed by the end of May of the following year. So as a summary, normally, if you have stayed less than 5 years and with just the salaries in Korea, everything is managed through the company and through the withholding done with the company. If you are staying more than 5 years, you are likely to have other revenue, and you shall not forget to this additional tax filing by end of May. Then how is my tax calculated? So very quickly here, all the income is aggregated. Then we have some deduction. We calculate, we apply then the tax rate on the tax based. We can apply some tax credit to the amount of tax calculated, and that brings us to the tax to be paid at the end of the year. The normal tax scheme for personal income tax is a progressive system from 6.6% to almost 50% for high salaries. I will not go into details for deduction tax credit. There is a document published by tax office that provides every year a list of deductions and credits available. It can be very technical. For example, the credit card use is quite complex calculation with several variables to be taken into account. But you can find the information in the booklets published by the Korean tax office. And those documents are in Korean, but also in English. What I would like to mention is about the so-called flat rate, which is a single rate applied to the taxable income of foreigners that have been staying less than 5 years in Korea. So this is an optional scheme. You have to apply for it if you want to benefit from it. It's a scheme that is renewed every 2 years because this is an exceptional tax provision from the parliament. So the proposed tax law is that is supposed to be passed in this December is likely to renew the scheme for 2 additional years, so until 2023. If we apply the flat rates, so in our case 20.9%, no deduction or tax credit can be applied. So for all people in this situation, less than 5 years, you have to simulate your tax using progressive tax rates or this flat rate, considering the deductions, the credit you may be eligible to, and calculate which one is the best. Obviously, the higher your salary is, the more likely the flat rate would be beneficial for you. But you have to do the calculation. And one additional very important change, recent change, is that qualified housing benefits, which means the housing paid by the company for expatriates, used to be non-taxable under certain conditions. From next year, this will be still the case if you apply the progressive tax rate. However, if you apply the flat rate, this may not be applicable anymore. So when you do your simulation, you have to consider that as well, whether you for choosing flat rate or progressive rate. I recommend you to use a simulation on the National Tax Service website. You have a tool to simulate your tax, and you can use several assumptions to see which one is the most beneficial for you. So I covered the general tax topics. I will add one more comment on the, I mentioned a little bit when talking about the question on cryptocurrency. This is the overseas financial account. If you are staying more than 5 years, you have to disclose all your overseas financial accounts. If during the year, at the end of any of the months, you had those financial accounts being above 500 million Korean won. So then you have a reporting to do. The penalty can be extremely severe if you don't do it. It's 20% of the undisclosed amount, and a huge amount, and it can also lead to criminal sentences if you are not doing. So please pay very close attention to this requirement. There are other filings that have to be done. I will not mention here, but can be some donations, can be some acquisition of overseas real estates. So there can be also other obligations as a taxpayer in Korea. I've tried to give at least an overview so that you have some you know what question to ask yourself when talking about tax. I recommend also to check some of the documents that are available at the National Tax Service website. So I'll try to show with the camera, but actually there is some guide published every year. One is the Easy Guide for Foreigners Year-end Tax Settlement. So this is for the tax settlement done in February. And we have a second book that is published also by Tax Office, which is called Individual Income Tax and Benefit Guide for Foreigners. And also that this one is covering the tax return to be done in end of May. Another document you have to look at is also the tax treaty. I've been mentioned tax treaty between the France and Korea. Or that can give you also some guidance on where some income should be taxed. So I think maybe we can have some question on the tax topic before moving to social insurance.
Yeah, thank you, Julien. I think we didn't see well your screen, your camera and the publication since you're sharing your screen, but we can send the reference for these documents afterwards.
Yes.
Yes, we had 2 questions on tax. He wanted to know if there was a difference for income taxation between like a general expatriate and a detached person from abroad in terms of income tax.
To my knowledge, there is no difference. The status detached or expatriate will have impact on social insurances, and we will talk about it later. But from a Korean point of view, the type of income is the same, and we have to ask ourselves the same question: is it Korean source income or French source income? So, in my view, there wouldn't be differences from tax point.
We had also another question that we received before the webinar. This is more of a status for a person who is a freelance. So I'm not sure it has maybe too specific, but you can maybe have some clues about it. So this person was asking that he's freelance and he only works with company from other countries than South Korea. He received his income from abroad, and are these income from other countries exempt from tax and regarding additional costs like food, transport, accommodation, is there different taxation of income as a freelance?
Again, this is a very specific question, and I think we need probably to know more about the personal situation and tax it in order to answer. But I would say if the person is staying in Korea and so rendering a service overseas and probably get paid from overseas to Korea, I think first is a Korean resident because staying in Korea. Second, the income is coming to Korea, paid to Korea probably. So then should be taxed in Korea. I think we have to look, if it's a foreigner, we have to look at the status. How is freelancer is not really a tax concept. So how is registered is normally a type of business income. Is it registered to tax office? And is it consistent with immigration status also? And at the end, if it's business income, then this is a taxable income, and the deduction will be all the expenses that are directly related to this business activity.
I think we are done on the tax topic, so you can move on to insurance.
So second topic, the social insurance coverage. And this will be have to be considered together with what Cedric explained on overall on the benefit from registering to the pension, national pension, or health insurance. So I will, in my side, cover what are the contributions to be paid and usually what can be exempted or not in Korea. As a reminder, we can see here all the social insurance rate in Korea. Those are the compulsory social insurance. This is applicable to all employees and all Korean employees. And we have health insurance, national pension, employment insurance, and industrial accident, around 10% employer side, 9% employee side. And except for industrial accident, all the other items are contributions are shared between employer and employee. There are several social security agreements to deal with the exemptions between countries, and so France has a treaty with Korea on social insurance, and that's something we have to refer to whenever we deal with health and pension. Health insurance, let me start with health insurance. Basically, it's possible to get exempted from health insurance in Korea if you are able to prove that your private insurance, overseas insurance, is at least equivalent to what Korean national health insurance can cover under the general scheme. Normally, a contribution to the Caisse des Français à l'étranger, CFE, and the private insurance are enough to qualify, but you have to submit the insurance policy with the translation to the national health insurance so that they can review the benefit and confirm that the exemptions. And then you have to request this exemption every year. If you don't do it, then the national health insurance will consider that you are registering to the Korean national health insurance, and you will have to pay the related contributions. So normally you will receive, we can see on the right of the screen, this kind of letter every month, every year. You receive this letter from National Health Insurance and asking you if you are exempted and if you want to maintain the exemption, to submit the related form and documentation. So here, this is really a risk-benefit analysis, depending on considering what Cedric explained about the benefits of being registered to Korean national health insurance. Considering also that sometimes when you are registered to the Korean national health insurance, you may have some advantage, like we saw during COVID-19 for the mask or for the no-show vaccination opportunities. And also, I think another comment is that the French embassy is still recommending to have additional private insurance in Korea, especially to cover hospitalization costs. But at the end, I think it's a decision to compare the cost, the Caisse des Français à l'étranger cost versus the contribution under, which is a percentage of the salary. For national pension, this is mostly, we cannot be exempted from it, except for the detached worker. So here, we can come back to the question for the detached workers, so travailleurs détachés. These detached workers, they are normally covered by the French compulsory insurance system, so the Système Général de Sécurité Sociale. In this case, they have to obtain a certificate from a French government organization and provide this certificate to the National Pension Service to get the exemption. In other case, which means 99% of other cases, normally they are covered by the Caisse des Français à l'étranger, which is an optional insurance system. And so these do not qualify for exemption of Korean pension. So once you, so in most cases, you have to contribute to national pension in Korea. Then if you are leaving Korea within 10 years, you can get refunded of what has been contributed. This is not possible after 10 years. But thanks to the social insurance treaty between France and Korea, you still can claim the year spent in Korea, them taken into account for your French pension system. So that's something to consider. I think there are, in practice, there are a few complexities. One of them being that you cannot get the benefit of more than one social insurance treaty. if you are in France. So it requires some planning here to make sure you can benefit the best from the contribution that is paid in Korea. The last item, I will go very quickly on this one. This is an employment insurance. So just to be aware, it's quite complex depending on your visa type. And sometimes this is optional, sometimes mandatory, sometimes it depends on whether the other country, so in our case, France, require the payment in France for Koreans working there. So normally you have to see with your employer, and the employer will call the organization, Korean government organization, to confirm whether this can be exempted or not. And I think I covered all the social insurance topic, and I'm happy to get the question on this quite technical topic.
Yeah, we can maybe stop screen sharing and then have a discussion now more informally between us. We had a question regarding health insurance. An interesting one we had, she was telling that national health insurance subscribers in Korea, so NHIS subscribers, are not covered when they go abroad. So usually Korean people or people in the NHIS subscribe to travel insurance when they want to be covered abroad. But those travel insurance, they don't cover foreign nationals when they visit their home country. So how do we get insured when we are French residents in Korea and we go back to France?
Very, very specific questions. And I think this is typically the question we have no answer, but this is typically the question for our working group at the FKCCI and to investigate. I think, and I guess more and more people have the same question, because the trend is that more and more French living in Korea are indeed registered only to the Korean social insurances. So I think this question is indeed important for them. So I think the FKCCI will investigate on this topic, and hopefully we can have a satisfactory answer on this question.
Okay. Yes. Well, I guess it would be through private insurance, and we're gonna dig into the topic indeed. Do we have any other question from the chat, or I didn't see more?
Yeah, I think there is one topic that is part of the seminar also, is personal liability insurance. So we didn't really cover this topic today, but just to mention that this is not always covered by insurances provided to expatriates. So it's possible to find in Korea Hyundai or Samsung insurance have some package for civil liability insurance. The scheme can be a little bit different from what we have in France, a little bit more complex financial products, but quite important. Or I know there are a few like MSH or a few other private insurance can also cover for this personal and civil liability insurance. It's quite important to be covered in Korea for this as well.
We have a question in the chat regarding the pension that can be reimbursed to us, that we have to stay in Korea less than 10 years. She says he asked if it's about 10 years of working, or if it's all summed up as a student. Or
I'm not too sure, but I guess this is 10 years of contribution, but it can be, I think it can be double checked.
Guillaume, you're raising your hand. Maybe you can unmute yourself and turn on your video.
Yes, thank you, Oriane. Thank you, Julien, for the very interesting presentation. I have a question. You had a slide saying the housing benefit will start to be taxable from next year if we're under flat rate. So just to clarify, no benefits for now are taxed at all, like school payments, housing, flight tickets?
No, it's only, so housing, we are talking only on housing. There are several conditions so that it cannot be taxable. So it's really targeting the expatriates. So for example, if you are a minority shareholder of the local entity, you cannot benefit from this. So it's only housing provided to expatriates under certain conditions. That it was possible to have it exempted, and now it's will not be applicable anymore if you use the flat rate.
The benefit like school payments are already taxable.
Yeah, all the benefits and especially school payments are already taxable. But for school payments, some deductions, if you are not using the flat rate, but just a progressive rate, there are some deductions possible under a certain limit, like any Korean.
Then I have a very specific question. When we buy shares under employee share programs from the company, so you have a special discount, you can buy with a discount of 20%. Apparently, and we have to keep the shares for 5 years or 4 years program. But apparently in Korea, we have to pay an immediate tax, which is a delta between the current share price when you get the share and the discounted price, which we don't pay in France. When I'm in France, a French employee and I have this scheme, I don't pay at all. And apparently in Korea, we would have to pay for it. Are you aware of this?
There are specific rules for that, indeed. I think you have to look also at whether this is taxable at whether we are talking about the shares of the mother company of the subsidiary. Yeah. And if the mother company, it's also the benefit may not flow directly through the local entity. So that can be one of the cases you have to use also a taxpayer association that I explained a little bit before.
Okay.
Yeah, there is some taxation before the shares can be indeed sold.
Okay.
Thank you, Guillaume. Anybody else? I think we have more questions from we will take just a few questions before we wrap up. What is the ceiling salary for NTS and the rate? Who wants to answer? Cedric, also you can answer if you'd like, but maybe Julien, if you have the answers.
That's a very good question, and I don't remember. Used to be, but there is indeed a ceiling for that. So I think we can answer after the seminar for the exact amount. But you're right, there is a ceiling.
Another question: in the case of people who are unemployed, are there some contributions that are mandatory or subject to an exemption?
I think it's okay. Someone answer the question for the ceiling. Thank you very much. So 5.24 million Korean won. So I think for simulating the cost that for pension, it's quite interesting. For unemployed case, I would say that at least the health insurance for a resident is, and because this is the same question, same item I mentioned before, I mean, we need to prove that there is at least coverage for a resident, foreign resident, that is at least equivalent to what Korean can have under the Korean national health system.
I think we can wrap up if I don't see any more questions. I'm going to just say a few words for the wrap up. But thank you a lot. This is the kind of event that we will organize more and more at the chamber with this kind of format where we interact directly. We invite experts like Julien to answer and give really useful information for all of us. Also, don't hesitate to send us to us just topics that you would like for us to cover. We know that we have a lot of questions on COVID-19 regulations, visas. Now that we are in the post-COVID era, the environment is changing quick. Just don't hesitate to share the topic with us. We are really looking for your feedback so that we can design, invite experts for you and give you useful information. For that, maybe Cedric, you want just to say a last word for the wrap up? Or
yeah, good. I would like to thank all the participants. We are very happy to welcome so many participants today, and we really would like to know what is your practical questions and try to support more all of our members in all the subjects. Then please don't hesitate to contact us and to share with us your own issue and to know more about how we can support you. And thank you very much. Thank you again, Julien, and thank you, Oriane. Thanks all of you. Merci beaucoup.
Thank you. Merci.
Oui,
au revoir.